Very good. Okay, welcome everybody to this episode of Mortgage Show. My name's Justin Chose. My goal, as everybody knows, is to show everybody the value of a mortgage, the things we can do with mortgages, that it's an extremely valuable tool to help families in any financial situation. Whether you're looking to buy your first house, whether you're looking to invest in real estate, a mortgage is a very, very valuable tool to help you accomplish all of those goals for you and your family. So that's what our goal is here today. I am super excited. We have Deanna Lipp from Home Equity Bank, or Chip Reverse Mortgages. Welcome, Deanna.
Thank you so much. Thank you for having me, Justin.
Yeah, no, I'm super excited. As we kind of talked before we started here, this is the first show. So this is the first one I'm kind of doing. So super excited, and we'll kind of work through all of the glitches together.
Well, I'm honored that you chose me to do this with you today. So thank you.
Yeah, well, I think it's an important topic, right? I mean, we have an aging demographic, right? We have a lot of people that are starting to get obviously getting older, and a lot of these questions are starting to come up. They're sitting on a lot of equity in their home, as we've seen house prices rise drastically over the last couple of years. We see people kind of struggling to, pay groceries, help family out, and do all that stuff. So hopefully, as we continue to go through this today, we'll be able to answer all of those objections. And hopefully, again, like I said, the goal here is to show people how there's tools out there to help put them on a path to a better financial future. So to start off, give us a little bit of background about yourself, about Home Equity Bank. Yeah.
Perfect. So I'm Deanna Lipp, and I'm the Business Development Manager here with Home Equity Bank for the Golden Horseshoe. So supporting you and your fellow brokers in all things CHIP. Home Equity Bank, what I would say is absolutely the leader in CHIP reverse mortgages. We're the national provider of reverse mortgages. We've been in the business for over 38 years. So, as I always hear, we're the OG. And we have longevity for sure in the products. So we're able to pivot when we need to. And again, we are definitely the leader in all things reverse mortgages.
Very good. I was shocked too when you had said 38 years when you and I had first met. I didn't even realize that it had been around that long. So very interesting. So you've kind of seen it all, worked out the kinks, and it's nice to see that you're kind of still here as the product continues to get more and more in demand. So,
Absolutely.
So what makes the company, what makes your company different than other companies in the market?
Well, as we know, and you touched upon it, Justin, the demographic is changing. There's more Canadians over the age of 65 than under the age of 15 here in Canada. So something needs to change. So we know that there would be competitors coming into the space. I mean, it's inevitable. The product is never been in demand as it is now, and will continue to be. So what makes us different again? We're the national provider. So we lend pretty much everywhere. We have seen it all in our 38 years in existence. Some of the things we do differently, or what we offer that may be different from some of our competitors right now in the space, are we do blanket mortgages. We allow second mortgages behind CHIP up to 65%. And again,
and that's 65%. Sorry, that's 65% of what? That's 65% of the appraised value of the property, right?
Correct. Yes.
Right. So you can put a loan on the property up to 65% of the value of the property. So if the property is valued at, we'll use round numbers, $100,000, the total combined lending on the property would be 65,000, right?
Can't exceed 65%. Correct.
Yeah.
Yes.
Okay.
Yeah.
Perfect.
So that's a little bit different. And I like to always say, again, our biggest difference is also we have amazing business development managers across the country that are able to support all of our mortgage partners. And again, we are all things CHIP reverse mortgage. So we really, I think, know it better than anyone out there.
Yeah, I know my experience in dealing with Home Equity Bank or CHIP reverse mortgages. Before I dealt with you, I dealt with a lady before, and everyone was extremely helpful. I think the key is, and one of the things I like about it is it's really about educating the client, right? I mean, I think we find a lot of people that are interested in the product are coming in with possibly some misconceived notions of it. Everyone's got a little bit of a different idea of what a reverse mortgage is in their head, and it's great to kind of partner and work with people like you and your fellow colleagues to make sure that we're educating all clients properly, and they know exactly what it is. And in a lot of cases, we're kind of myth busting a lot of those misperceived notions as well. So hats off to all of you and the team there that are doing a great job at making sure that providing us with the tools to make sure that the client's informed, and you're always there to help support as well and jump on if the client's got additional questions. Is that I know you've kind of offered it up in the past where, hey, I'll jump on a call and help answer any of the questions as well. So it's nice to kind of have that as a partnership as well. So thank you for that.
Absolutely. No worries. And I would be remiss if I didn't give a shout out to our marketing team at Home Equity Bank. We by far have the best marketing team out there, I believe. And, they've done an amazing job, not just supporting us in the field, but supporting our partners with regards to education pieces. Look at our website. There's so much content in there that whereby we've done all the work, and you just plug and play and go out there to your COIs or to the public from an education perspective. So they have done an absolutely amazing job in supporting us also, and of course the product.
Right. So what's the ideal client? I know you said you have to be over the age of 65, right?
55.
But when someone
55.
Did I say 65? I meant 55.
That's
I was thinking 55 in my head. I was thinking 55 in my head. But
no worries.
What's the ideal client, right? Like what's the pain points of a lot of the people that you kind of see inquiring or that are proceeding with a reverse mortgage through Home Equity Bank?
Yeah, absolutely. So it's been pretty amazing what we've seen over the last few years. And I just want to start and go back a little bit with COVID. The one thing that we really noticed as the inquiries were coming in with regards to, can we use a chip reverse mortgage to fund in-home health care? Because I really, at this point in time, don't want a loved one going into a retirement or a long-term care facility. Nobody wanted to put their parent or grandparent in that situation, given what was going on at the time. In actual fact, there were individuals that were taking their loved ones out of those facilities and hoping that they wouldn't catch the virus. So, that really sort of stands out to me, because we saw quite a bit of that as to what CHIP was being used for. The other thing that we really noticed is, there's two buckets, wants and needs. So yes, there are those needs where a reverse mortgage, a client wants relief from their existing monthly mortgage payments. So with a CHIP reverse mortgage, there's no burden of a monthly payment.
So clients don't have a monthly payment, right? When
Correct.
They take a CHIP reverse mortgage. And I guess
Correct.
that's the idea of reverse, right? A normal mortgage is you're paying down, you make a payment, which is paying down part of the principal. Whereas now here we're reversing it, right? So there's in theory, I'm guessing, right? If I'm correct, there in theory is a payment, but it's the reverse. It's getting added on to the balance owing, right? At the end.
You got it. Yes.
Right.
And when we say there's no burden of a monthly payment, we do, there are options, and we do allow interest payments to be made in part or in whole. And then there's a lump sum component on an anniversary date every year if they'd like to take advantage of. But really, they have the choice. They don't have to make a payment. Our mortgage is not due and payable until such time the client or clients, so in a two borrower situation, when the last of the homeowner lives in the property, let's say if in a spousal situation, someone passes away, nothing changes. But the remaining spouse, when they no longer live in the home, whatever that looks like, such as, they need to go into a facility or they pass away, that's when our mortgage is due and payable. So
right.
there's
So husband,
burden.
wife, right?
Mm-hmm.
Husband, wife are in the house, right? Mr. passes away, Mrs. is still in there. I think this is one of those myth buster things that we should address, right? Is I think a lot of people think that they're going to be forced, the other spouse is going to be forced out of the house, right? And that is certainly not the case. That's not what you're there for. so husband, Mr. unfortunately passes away. Mrs. will be able to stay in that house until she passes away, or she sells the house, at which point then you get, the mortgage will be paid off with the proceeds from the sale of that property.
Absolutely.
Correct?
Absolutely.
Right.
Correct. Yep. Like any other mortgage. So, when we look at, the cost of living now in Canada or
It's
anywhere,
crazy.
it
It's
is
crazy.
crazy. So if you're
Mhm.
on OAS CPP, if you may or may not have the benefit of a private pension, that's what you're living on from a cash flow perspective. Canadians are living longer and they're living healthier. A lot of us are outliving our savings, So yeah, so having the ability to alleviate that monthly payment and have someone be able to stay in the home and the community that they love is huge. So that's really sort of when I look at a needs based, alleviating some debt so that they can be comfortable. When we look at the wants, another one of the other things that COVID taught us was we had so many inquiries about individuals wanting to renovate. They've been in their home for over 2 years, stuck there. Let's access some of the equity and do renovations to our home because they do want to stay there. So that's more of a want. Purchasing vacation homes. We saw a big uptick in that, or a rental property. One of the things that we're seeing now present day is using chip reverse mortgage to assist a loved one, a child or grandchild, to purchase their first home.
Mm,
Look at the market today. First-time home
mm.
buyer as a young Canadian trying to get into the market is nearly impossible doing it on their own.
So like a
So
pre-inheritance to
living
help the family out.
inheritance. Absolutely. What better way to it's nice to see a loved one flourish and enjoy the fruits of a parent's labor all those years while they're still alive versus when they're no longer here. So we've really, really seen an uptick in that, the use of funds for that. The other
Yeah,
thing
now
is,
there would be a tax benefit to that too, would there not? Because again, I'm not a lawyer or an estate expert by any means, but if you were to, my understanding is, if it goes to the estate, there's tax implications within the estate as well, right? But if you were to pull the equity as a pre-inheritance, if my grandparents were to do that for me, they didn't. I wish they would have, but if they were feeling generous and willing to help me out with something like that to purchase a cottage or my first house, let's say, they would take that money out. There would be no financial burden to them because they wouldn't have the payment, right? It would continue to get added on to the balance, and that money then would come to me, my brother, sisters, whoever, the people they want to help, on a tax-free basis, right? So there's significant
absolutely.
savings from an estate planning perspective, correct? If you utilize this and take advantage of this, again, take
Yes,
advantage of this product.
there possibly could be, and also all of our funds are tax-free from the get-go, even from when they access it. So yes, absolutely. There's definitely benefits there.
Yeah, wonderful. Okay, so we have somebody, or someone super interested. Could you walk us through the process of applying for a reverse mortgage? What does that look like?
Absolutely. So, as a broker partner, you would submit as you would normally do through the system, and just like any other lender, we would provide you with a pre-approval or an estimate letter. And if you'd like to move forward, then it really is the same process of any other mortgage. The difference being, obviously, we don't have the traditional income qualifying criteria. What we're looking for is a client or clients that demonstrate they can make their property tax payments, condo payments if it's a condo, and ensure that they can afford ongoing home insurance. So from a submission or qualification perspective, again, on the qualification side, we're a little bit lighter than other traditional lenders, but really the process is the same. And we would do an appraisal on the property to establish value. Once that value has been established, then we would issue a commitment as to our maximum lending limit, which is based on value, age of applicant or applicants, and in some instances, property type, and location. So those are our four key components to how we qualify. Every client needs independent legal advice. That cannot be waived. So
And so independent legal advice, what is that? What is that, and why do you require that?
well,
Why is
we
that
think
an
it
important piece?
yeah, we think it's very, very important. When you look at the demographic that we're dealing with, and again, being a little bit different than a traditional mortgage as we know it, we want to make sure that the clients understand the mortgage that they're entering into. You know, one thing that we're always, and I know you are also, Justin, is we need to make sure that that from a suitability perspective, this is a really good option or the best option for your client. So having a second set of eyes on that and someone independent from a broker and or mortgage professional and from home equity bank is very, very important. So
Yeah. Yeah,
yeah.
I agree. I know we've done it in the past too, where people have kind of come in. We know it's the right solution for the family, Mr. and Mrs. To stay in the house. Usually, we get a lot of family that's involved as well. Just to make sure that the mom and dad or whoever it is, grandma and grandpa, are being taken care of properly.
Absolutely.
And we've had a lot of other family members that have even attended some of those meetings, right, with lawyers to kind of get ideas. So to understand the process and that they are in fact being taken care of. So I agree that I love that that's there, right? It takes a lot of, we're educating the clients kind of how everything works, and then it's just someone else who's kind of there to reiterate it. So I do think that it's wonderful. So what criteria? I mean, we kind of talked about the minimum age is 55. Mr. and Mrs. What is it that what's the criteria or eligibility for the product, right? So how do you determine how much a client's getting? How do you determine how much a client's getting, right? Because I think what we hear a lot is, again, marketing teams doing a wonderful job. We're getting those amounts, is saying you can access up to a certain percentage of in your house, and then the clients aren't getting that exact amount, right? So how is that determined, and why do you do that? Everybody's kind of not the same, right? Dependent on age and what their gender is. So how do you determine the eligibility?
Right,
Or the
right.
amount?
You're absolutely right. And I know the up to 55, we do get feedback saying, well, why am I only getting 35%, So really it's to protect the client. The client is their home is probably their biggest asset that they'll ever have in their lifetime. And we want to ensure that there is equity left over when the time comes that they no longer live there. We know that it's important for people to leave some type of a legacy, So we really want to make sure that that will be able to happen, that they're going to be able to pass that on to their loved ones. So we look at, again, age of the borrowers is critical. The older you are, the more we lend for obvious reasons, right? So in a two borrower situation, male and female, we'll look at sometimes what is the average age. So we're able to more often than not give a little bit more in some situations. Property location is key. We know from appreciation values that some areas are different. So we want to make sure that there's a good balance between interest accrued and appreciation availability at the end of it. So really that's the important piece. Although we do have a no negative equity guarantee.
So what's that? What is a no equity guarantee?
No negative equity guarantee.
No negative equity
Yeah.
guarantee. My
Yeah,
apologies.
that's okay. So it's our commitment that in a situation where perhaps, let's say someone was 57 years old and they lived till 100, there may not be any equity left over. As long as the property, when it's time for home equity bank to be paid out, as long as the property is sold at fair market value and there's a shortfall, we would never go after the estate for the difference. So that's
Right. So
also an important point. Yeah.
absolutely, yeah. So the homeowner's protected, because I think that's another myth as well, right? Or I wouldn't say myth. I would say more of a concern that we get, right? So hey, you're adding this mortgage on to the payments onto the balance every month. What if, the value of the house all of a sudden is less than what I owe, right? And
You
I
got
think
it.
one of the things that I love, and it's a great illustration that you had shown me when we had met, and then when we had done some files together, it's also something that we present to clients, is we do show the difference of how a home price can appreciate over time, because we are in Canada and we're lucky, traditionally speaking, in the long game, real estate's always the long game, but in the long run, house prices do appreciate over time. And one of the good illustrations is that you do show, if we were to get, a 1%, a 2%, a 3% appreciation, including those payments, what that looks like over the course of time, right? So I know you have that no negative equity guarantee that's in there. But again, that illustration's a great illustration to kind of show that, one thing I remember, the comment I made to you, I'm like, wow, when you see that equity is still protected over the course of 15 years, there's still that same amount of equity, even though you're adding on to the amount that's owing. So I thought that was
Absolutely.
super
It's
cool.
a powerful tool. Absolutely.
Right. Wonderful. So I'm just flipping along here to kind of continue on. So I know that there's different ways that clients can receive the funds, right? You had mentioned kind of at the start, there's a couple different ways that they can do it in terms of payments. How can they receive the funds? So, let's say we have somebody who has a house that's worth $600,000. We go through and they're able to receive, they're able to receive 600,000. They're able to receive $250,000 is what you would approve them for. So how can they receive that $250,000?
Great question. So clients have the flexibility through CHIP to receive funds either in a lump sum or a combination of a lump sum and a monthly or quarterly payout. So in the scenario that you just described, they qualify for $250,000. Let's say they owe $150,000 existing mortgage with another institution, whether it be a mortgage or a combination of a mortgage and a registered line of credit. So we always have to pay out any existing encumbrances. Like any other bank, we need to be in first position. Okay. So we would pay out that $150,000 mortgage. So now they no longer have the burden of a monthly payment. They would have access to the additional funds of $100,000 if they so choose. They only pay interest on what they use. So let's say they're happy with paying out the existing mortgage. It's going to increase their cash flow substantially, where they're going to be able to live comfortably, and they don't really need the additional funds at this particular point in time. They will have the option at any time, whether it be 6 months, 2 years, 5 years from now, to access those additional funds. So let's say they wanted to do a bit of a renovation, or they needed a new car or a new furnace and windows or air conditioner. They would have access to those additional funds, similar to a line of credit, but it's not readvanceable. I don't even know if that's a word, but it sounds good.
Yeah, it's a
So
word. It's a word in our world, right? We
exactly.
use that in the mortgage
Yes.
world. Yes, yes.
So they would have access. If they never needed it, they never have to utilize it, but it's there for them just in case. So
Yeah, just a
they're
good peace of mind, right?
absolutely. The other option we have, so that would be our CHIP product. The other option we have is what we call our income advantage product, where let's say there's a very small mortgage. So same situation, same scenario. They qualify for $250,000. They have a very small mortgage or no mortgage. We would advance a minimum of $20,000, and then they would have the option of taking $1,000 a month or $3,000 a quarter until the funds have been exhausted. Okay.
It's almost like creating a pension for yourself, right? Accessing the equity in your home to live, the well-deserved life that you deserve to live, right? From paying off
Absolutely.
that mortgage and
Absolutely.
yeah. So
and we see this in situations, Justin, where in particularly a two borrower situation or two homeowners and one of the spouses passes away. Unfortunately, the pension that was available at that time almost dies with it. So, that really cuts into the cash flow, whereby, the remaining spouse is left with maybe 40% or maybe nothing. So they really, really need that top up to make up for the pension of a spouse that's no longer there. So that's a
Absolutely.
really, really, really good example of an opportunity where that would come into play.
Right, right. And those are all things, just, to kind of, put a little plug in there. Those are all things that we at Chaussee Mortgage Group can help all clients with, right? One of the things that we pride ourselves on is we do build for everybody, whether you're a first-time home buyer, whether you're a repeat client, whether you're an investor. We build out customized budgets for every single client. So we can help people with that. If they, the scenario you talked about where, a spouse passes away and there's challenges in understanding kind of what the bills are, we will commit to you to take that time and build out a budget, work with a financial advisor if you have one, to make sure that we can understand exactly how much money you need to continue to live that life that you certainly deserve to live, just because it was a mishap and a spouse passing away. So great on that. I just wanted to kind of touch on that. So did we cover the different products there? I think those.
So really the chip reverse mortgage and the income advantage are the two main products. We also offer a product called Chip Max. And what that product is it's an opportunity based on the application. It's attached to a credit score. And location in particular, and age, where based on the criteria of your client, based on your client's situation, they may qualify for more if they so choose, but it comes at a higher interest rate also. But it could be available. It's available for some, but not all. And the other product we have is our Chip Open product, and that's more specific to. We always say reverse mortgage really isn't a short-term mortgage, but this offers clients the ability to, they know for whatever reason that it is going to be a short-term solution, whether they know that they have money, a lump sum coming in from an inheritance, or even in situations where they know they're not going to reside in their current home forever. They would be looking at maybe right sizing in the near future, and or perhaps they're building their forever home in retirement, and they want to access some of that money to fund the build, let's say. So that product is used for more of a short-term solution to meet the client's needs. So we really do have four great product offerings to meet any situation that clients may be looking at for CHIP.
Right. Are there any properties that aren't eligible? When you mentioned the right sizing there, when we see people, they living in a subdivision type house and they're trying to right size and do stuff and join, maybe some different retirement communities or any of that. Are there any properties that you don't consider, or anything that wouldn't work? I mean, the one that comes to mind is, I remember we had someone just recently that was looking to move into, they own it, but it was more of one of those mobile home type of communities, right? And I understand that was something that, we had to pass on. It didn't kind of meet the requirements.
Right.
So is there anything else that people should know and have an understanding of what properties are not within your appetite of lending on?
Sure. So to your point, is some of those communities are on leased land. So like any other Schedule 1 bank or lender, we won't lend on land that's not owned, unfortunately. We will do, I guess what we wouldn't do is an operating farm, but that doesn't mean we wouldn't consider, a house and 10 acres on a property that doesn't exceed 160 acres and that's not being actively farmed. We will consider those, but farms as a whole, we would look at a little bit differently. Not saying we wouldn't do it, but leased land's the one that definitely comes to mind. Yeah, we unfortunately can't lend on leased land.
Yeah, and like you said, that's fairly common, right? With any of the big banks, right? The big lenders out there. So that's pretty normal. So I know as part of it, you had mentioned we would require an appraisal on the property, right? So for people who don't know, an appraisal is a third party company that is hired to go out to the property, and they generate a report based on sold comparables in the area, houses that are very similar, and they provide a value to Home Equity Bank, right? It's not us that does the appraisal as the mortgage broker. It's not Home Equity Bank that does or the lender that does the appraisal. It is a third party company that goes out and does that. So what does that look like? How do you handle the appraisal process? What does that look like? So we get our commitment requires an appraisal on every file, right? We know that we need an appraisal.
Correct.
What does that look like? How does that happen?
It's quite a simple process. So basically, when the file is submitted, there's usually an estimated value attached to it. So we at Home Equity Bank will facilitate the ordering of the appraisal. We have a list of approved appraisers, so we know they're accredited, and the appraiser would reach out to the client directly to set up an appointment for the inspection. Once the inspection is done, the appraiser would send us back the report with the value that's been established, and that's how we determine how much we can lend. It's a very, very simple process, but I think the most important part is that, we use accredited appraisers that so you can take comfort in knowing that, that's all they do is they appraise properties and they're accredited. So, yeah.
Right. Yeah, it's a pretty there's nothing for the the homeowner to really do there, right?
No.
I mean, you order if they already own the property, they would just get a phone call, right, of the appraiser that's looking to come visit the property. They will need access to the property. I'll even say that, right? They do come in. They're usually there quickly, right? I mean, we've had a couple of appraisals done at our home, 10, 15 minutes. They'll take some pictures just to make sure that, house is in good standing and in good condition, and take that back to generate the report. So yeah, so wonderful. So what happens? I know you said there's a couple requirements for the borrower, right? Pay property taxes, home insurance, and maintain the property. So what would happen if someone failed to do that?
So like any other Schedule I bank, we hope that wouldn't happen. And when I just want to take a step back, when we say maintain the property, you're right. Maintain it as far as, making sure that it's taking care of itself, the property, but also maintaining ownership of the home and not adding or taking anyone off title without our bank's permission. So absolutely. If something were to happen in the rare case, I mean, we're not here to take someone's property away. We would work with the borrower or borrowers to find out exactly what is the situation. Why can't they pay their property taxes? Is there something that we can do from a refinance perspective? Do they just need a little help for a short time? So it's really understanding why they can't. And I think by the time it would get to that, I mean, the client themselves may realize that maybe it's time they do have to move for whatever reason. So yeah, we're fortunate, knock on wood, that we don't have too many of those situations. But again, the clients are obligated to, again, keep their property taxes up to date and have valid home insurance and maintain ownership and maintain the property.
Right. Okay. And most people do, right? I mean, we don't really see that come across. I mean, if there's people are doing this to stay in their homes, they do have, pride of home ownership, right? So nothing,
absolutely.
just the basic stuff there, right? Nothing to be concerned about with those requirements. So, so can a homeowner with a reverse mortgage, from Chip Reverse Mortgage, can they leave it to their heirs? What does that process look like, if they're looking to leave the house to, to their family or their heirs?
Absolutely. So what we say is that our mortgage has to be paid out after death. There's a 180-day window to which we would like to be paid out. So in the situation where the property is being left to the heirs, there's every opportunity for them to purchase the property. So whatever happens, sort of, I say, behind the scenes, is fine with us. We just know that we need to be paid out. So if an heir is going to purchase the property, or if there's available, or they can afford to pay our mortgage out, that's fine. That's absolutely not an issue. If in the situation where the heir is not purchasing the property, we would still have to be paid out. Let's say it's through a sale. The heirs would still receive the remaining equity in the home after our mortgage is paid out. So I know I covered two options there. So yes, someone can purchase the property and pay us out, or just pay us out. Or if they choose to sell, they would still receive the remaining equity in the home as deemed in their will. We don't get involved in any of that. We don't own the home. We're not on title. So it's just like any other mortgage, whether it be Bank of Montreal, Scotiabank. Yeah, it would.
Yeah, I'm
would,
glad you brought that. I'm glad
yeah,
you brought that up, that point, right? Because that's a big,
it's a big myth.
misconception or myth as
Mhm.
well, right? That
Yeah,
don't do a reverse mortgage. They own your home. They own your home, which is not the case. You own your home. You are on title. It's no different than any other bank. You know, there's a charge, as we call it, right, which is
Mhm.
registered, or a lien, right, that the money is owed if that property is to get sold. So I'm really glad that you brought that up, because that is a big
Absolutely.
misconception
Mhm.
that we do get, right? So yeah, so we had talked about kind of, you know, to repay the reverse mortgage, what happens in the event of a death. You had kind of touched on that. Thank you. So someone proceeds, you know, now they have their reverse mortgage, depending, you know, whether they're in the chip max or whatever product they are. What type of support do you offer to those clients once they have the mortgage, right? Once you're with them, what kind of support does chip reverse mortgage offer the clients?
So every year, the client will receive an annual statement. So they'll know where they're at. So it'll be their principal balance, and the accrued interest will be laid out. And we have great support from our consumer or client relations department, which the number is available, and they can call or email with any questions regarding their statement or anything else with regards to their reverse mortgage. So our client relations department is definitely there to support and help with any questions throughout, whether it be on the statement or throughout the term of the mortgage.
Right, right. Very good. Okay. Yeah, we're kind of getting towards the end here. Just kind of before my last question, I just wanted to
Mhm.
kind of throw it out there and say, you know, is there anything else you'd kind of like to add? You know, I know my final question is here, you know, what kind of training and resources do you provide to brokers and that, and how that works? But, you know, before we kind of answer that last question, is there anything we've missed and anything that you think would be very important for people to know?
I just think that the important message I think that we're trying to get across is, you know, the education piece is so important. You know, there's a lot of misconceptions, there's a lot of myths. You know, let's have a conversation, look into it, contact your business development manager. You know, I really think it's more important now than ever for chip reverse mortgage to really be part of a conversation for a certain segment of customers that brokers service. You know, putting you know, clients, this demographic into, let's say, a private mortgage where there's still a payment that they have to make, and they're already struggling with making payments on a traditional mortgage may not be the best suitable product for them or offering for them. So, you know, take the time, reach out to your BDM, find out a little bit more, because I really think that you know, not that we're mainstream, but it's becoming more and more popular for sure.
Yeah, very good. Yeah, so that'll lead me into, again, kind of that final question. So what kind of training and resources do you provide to broker partners like myself, that are, you know, looking to offer this to their client? Because look, to offer to their clients, because again, I see this as I love this. I love this product. I think there's an enormous, you know, it can help, again, like I said, it can help people financially, right? You know,
Absolutely.
it's conversations we've had in our household with our parents as well, you know, as they start to get up there and you know, worry like, oh, you know, it must be weird when you get to that age and the pensions start kind of
Absolutely.
getting down, right? And I remember saying like, oh, don't worry, you just use the equity in the house and get a reverse mortgage, right? Like, don't worry about
Right.
anybody else. Live the life that you want to live, right? So again,
Absolutely.
what kind of training and resources do you provide the brokers about the products?
So brokers have access to their dedicated business development managers. I would suggest that you go on chipadvisor.ca. There's a button that says Find Your BDM. As a broker, put in your location and the area that you service or where you sit. per se, and it'll give you who your dedicated BDM is. So use and abuse us. We're a wealth of information.
I use that saying all the time. I use that saying all the time. My wife cringes when I say it, but yeah, I use it all the
Yeah,
time.
absolutely. We're here to support. We're here to help educate. So we have a certification program that we offer, which is great. It's about a 2-hour session, and it's all things chips. So we really want, brokers to walk away with having a good understanding of how to identify a client and who would benefit and the suitability aspect of the product. On chipadvisor.ca, we have something called Broker Launchpad. It is amazing. Again, shout out to our marketing team. Really, we have anything and everything a broker needs to help promote chip reverse mortgage. It's plug and play. It's customizable for you to use. And so that is also a great resource. Our website, you touched upon the calculator and the financial illustration, a very powerful tool.
Yeah.
And again, that in itself dispels some of the misconceptions that there's not going to be any equity left in a home at the end of the reverse mortgage. So absolutely, and we're always happy to hear feedback. The BDMs want feedback as to what you think we can do and what you think you need in an effort to promote chip reverse mortgage. So we can bring it back to our marketing team. So yeah, we have webinars. Our marketing team does a great job. You probably see on LinkedIn and social media, our marketing team having webinars on chip to sign up for. So, we hope that, I think we do it better than anyone, supporting our broker partners as far as that piece goes, for sure.
Right. Well, Deanna, we made it. The first
we
one.
We made it.
We got it.
I think one of many, I hope.
I think it went off a lot smoother. I know in my head, I'm thinking it went off smoother. We'll see what everyone else says about kind of the feedback that we get on it. So I really wanted to thank you for carving out the time here to kind of go through this with me so that we can provide this value to our clients. And again, our goal is to kind of break all of those myths in the mortgage world, right? And again, show that a mortgage, when used properly, the different products that are offered out there can be a very valuable tool, again, to help families obtain their financial goals and, like I mentioned, live the life that they certainly want. So again, I want to thank you for kind of coming on here and helping all of our clients.
Awesome. Thank you so much for your partnership. So appreciate it.
My pleasure. And again, just to kind of sum everything up, if there's anyone out there that has any questions about mortgage, specifically reverse mortgage, as we're talking about here today, I am more than happy to walk you through the process, help educate you, and see if it's a right product for yourself, for a loved one, for any family, friends or family, anybody at all. So if anybody is interested, you can just simply go to meetjustin.ca. That is meetjustin.ca. And you can book an appointment directly with me. You will not be speaking with anyone else. You'll be speaking directly with me. And then we can, get, again, as I mentioned, get you started down a path to a better financial future. So Deanna, wanted to thank you again. For everybody listening, thank you so much. And I look forward to talking to everybody soon. Thanks again.
Thanks, Justin.
Thank you.